Well, top of the morning to you, folks. Today we're going to talk about, two very interesting things. What's going on with rents? And I think rents are finally tumbled, and I'm going to show you that, how the Federal Reserve is way behind the curve in that area. And then building, home builders, they're not building as many units as we need, and it's going to create a problem, folks. You think house prices aren't coming down? Well, if we don't have more and more houses, houses can't come down because of supply demand. Okay, so let's get over to the topic for today. So my name is Dan Free. I do this report every day to inform you guys what the heck's going on with real estate. We look at the economic news to see what role that's going to play in rates, because I can't control prices, but I can at least give you kind of an insight on what's going on with mortgage rates. So without further ado, let's get to it. One of the things I've been saying for the past probably 6 months is the Federal Reserve is way behind the curve when they're calculating the shelter costs when it comes to inflation. And I got proof for you right here. So let's go to this caption that we're seeing right now. And this is out just, I think it was yesterday. Rents increases return to pre-COVID levels. So the first thing I'm thinking is, oh boy, this is going to be bad news. But now, no, it's actually great news. So if you break down this, what's happened over COVID is home rents, I take that back, rents have increased on average during the pandemic 30%. You can see that right here. Okay, that's not me, guys. This is the analyst right here. So if you trust these analysts, then you're going to trust the data. So then you go down through here, and here's what I've been talking about. Here's where rent prices, if you go all the way up there, it's been between the 14 and 16% range. So if you look through right over here, you're seeing that rents back in 2022 were up basically across the board about 15% just in that year alone. Okay, where are we now? We're all the way down to, sorry, you can't see my thing. We're all the way down to here. So we're only about 4%. So let's drive down and get that actual data. What the information's coming in right now is, well, there's markets all over the board, but on average, they're seeing, it was right in here, about a 4.4% increase, okay? And you can see that down, if you look right through here, between the averages of where we are right through here, we're about a 4% increase, okay? What the Federal Reserve has been using in the CPI, the Consumer Price Index, is a figure called of 8.8%. Okay, well, the shelter figure creates or equates out to 40% of our inflation numbers. So if the Fed's using, basically rates up through here of where housing was, okay, and now they equate out to it down through here where housing's only maybe at 4% of an increase, where they have it at 8.8% of an increase. If we go from 8.8, what they're using, to the true numbers of 4%, and remember, it's 40% of our inflation numbers. If you take those numbers down, we're in the twos, folks. We're in the twos when it comes to inflation. Now, you guys are going to just blast me saying, Dan, you don't have a clue or whatever else. Guys, I'm just giving you the data that we're working with. I have to rely on government data and economist data to give you the feedback. Otherwise, I have a lot of people commenting sometimes saying, Dan, no, the inflation rate's more like 15%. Great. But please share your data with us so we can at least analyze it to see where you're getting your data. That's why I try to be as transparent as I can, because here's the data, folks. I'm not making this stuff and I'm not cherry picking. You can go to this, and this is basically Mortgage News Daily. And they do these reports on a daily basis. So if you want to get this snippet and other snippets like this to keep informed, you can sign up with my newsletter down below. So the next thing is we want to go over to is housing inventory. And we got that right here. Housing starts decreased sharply to 1.434 million annually. So that means home builders aren't building as much. So what does that mean? Well, let's go over to the headlines that we see right now in all over mainstream media. And this is today, folks. You can see it 17 hours ago, 1 day ago, 1 week ago, and 1 day ago. Housing inventories dropped to an all-time low by Redfin. Now, again, you have to trust the data source for that. But let's go over to the next one. Market Insiders. U.S. home prices near new record high as inventory drops to an all-time low. Next caption down there by Boston Herald. Housing market doldrum. Prices rise across states as inventory dwindles, and National Association of Realtors, which I know you guys aren't going to like, nearly 1/3 of realtors lack the inventory to stop clients. So you're basically seeing this, and all I did is Googled in here housing inventory, and this is the data that comes up. So don't shoot the messenger, folks. Let's get over to our economic news for today. But what I want to stress is next week, I think it's next week. Yes, next week is we're going to hear from the Federal Reserve. They're going to come out and tell us what they're going to do. So I'm going to give you that insight here in a minute. But let's look at some of the information that came in today. All we have is really permits, building permits. And remember the caption that we read over here? This a little bit kind of off maybe. Housing starts decreased sharply to 1.434 million. If you actually go over here where the numbers are, we were previously, the previous reading was 1.496 million units. The expectations were for 1.49. It came in at 1.44. So I'm not going to say it's a huge sharply decline, but we need more building permits to create more housing so there's more inventory so we don't have all of this going on. And why rents are coming down is, I don't know, because with the housing shortage the way it is, it's getting pretty dismal out there, folks. So with all this data, and that's basically all the data we have for today, what's going on with the basically what's going to go on with the Fed? What are they going to do next week? Well, we have a tool here. We go to the CME group, it's the Chicago Mercantile Exchange, and they actually have a tool, and it's called the CME Fed Watch tool. You can see that right here. Stay up to date with the latest probabilities of what the Federal Reserve is going to do at the next meeting. So right here, what's the likelihood that the Fed will change the federal target funds rate at the next meeting? Well, all we have to do is go to right here. There's a 99.8% chance right here that they're going to increase rates at the next meeting next week. So the thought is they're going to increase rates by 25 basis points, which is 1/4%. What's that going to do? Well, you probably heard about the dot plot, and I brought this up recently. The dot plot is basically every Fed meeting, each Fed person goes in there and they place a dot where they want the federal funds rate to be. Right now we're at 5. Let's see where we are right now in the federal funds rate. Well, we can actually just go back to here, probability. Right now we're at 5 to 5 1/4. Let me get my head out of the way again. We are currently at 5 and 5 1/4, which you can see right through this range here. And then the expectations is we're going to go from 5 to 5 1/4 to 5 1/4 to 5 1/2. There's a 99% probability that's going to happen when at the July 26th meeting. So that's what's basically baked into the cards right now. So with that information out there, or basically the limited information we have out there today, what's happening with mortgage rates? Well, to do that, we go over to this tool, and I have this on my screen all day long, trying to figure out what the direction the bond markets are doing to figure out what's going on with mortgage rates. So what we do is we watch this one right here. This is a mortgage-backed security bond that trades on Wall Street. That's the biggest component. This yield is the biggest component of your mortgage rate. So that's why we follow this. We don't follow the 10-year Treasury or any other bond, we follow that. Well, if you squint, you can see behind the scenes right through here, the market is up 0.06. What does that mean? Well, if the price of a bond goes up, all you need to know is the yield or the interest rate goes down. Well, 0.06 isn't really going to do anything. So I'm expecting rates to be flat today. No news out really today that we're seeing based on the economic calendar right through here, and there's really no events other than Wall Street earnings and things coming in that will also affect bonds and mortgage rates. So my name is Dan Frio. I do this report every day to inform and educate you guys on real estate, the economics behind it all. I don't make this stuff up. I give you all my content that I go over on a daily basis. I usually put that down in the description below so you can fact check me. But if you're out there and you're like, hey, I'd like to see, can I buy a house right now? How much would that payment be? How much of a credit score do I need? How much money do I need as a down payment? We can answer all those questions for you. Or some people are starting to reach out to us, say, Dan, I'm buried in debt right now. These credit card rates between 20, 25% are killing me. What can I do to pull out some equity in my house to pay off some of these bills? Well, I got an easy solution for you. Give us a call. We'd love to help you. 844-775-5626. Or if you're like, Dan, I just need your help, all you needed to do is go over here and click the Apply Now button. You're going to start just answering a couple different questions. Within 24 hours, me or one of my mortgage advisors will be reaching out to you to answer all your questions that you have. So thanks so much for watching, guys. God bless. We are going to have our new live events starting today at 3 o'clock Central Standard Time. Today I have David. He's a partner of ours at in the company. Well, not a partner. He's a loan officer with us in the company, and he specializes in VA loans. So if you're out there and you have any questions or concerns, or you just want to brush up on your VA guidelines and so forth, please join us. If you're a veteran out there, God bless you, man, or women, or whatever. Sorry, I know it's to 2023. Thank you so much for your services. Please join us so you can educate yourself on all the benefits that you have with the VA, with your VA benefits and certificate of eligibility. So God bless, guys. Hope to see you today at 3 o'clock. If not, I'll see you tomorrow.